But the reason why I think there's a good chance that the next longer cycle in the nominal model is 54 years instead of 36 years is because of the well-known Kondratieff cycle. Now, in fact, I expect you all know all about the Kondratieff cycle, but I thought I would search for it and just show you a chart. Kondratieff was an economist who, I don't even know when he first came up with the idea of his cycle, but he noticed what he described as an economic cycle, which averages between 40 and 60 years. And there have been various different calculations of the exact length of a Kondratieff cycle, but it is believed to vary. And many people believe or claim that it has an average length of 54 years. And so the Kondratieff cycle, which many people agree is clearly evident in the economic cycles of our world, the Kondratieff cycle, if it is about 54 years in length, would fit very neatly then with Hurst's nominal model if the next longer cycle, longer than 18 years, was in fact 54 years. Okay, that cycle could be considered to be basically the Kondratieff cycle. Now, the Kondratieff cycle was identified in the economy, and what we're looking at here is the stock market, and the two aren't exactly the same. As you can see from this graph here, I don't know how much you can see, but there's a blue line and there's a red line, and the stock market is not exactly in sync with the general economy. Okay, they tend to be slightly out of step with one another, and so the Kondratieff cycle was last thought to form a trough. Most people believe around about 1940, and of course, according to this analysis, our 54-year cycle, if there was a 54-year cycle, we are saying would have formed a trough way back here in 1932. So several years earlier than the 1940s trough of the actual Kondratieff cycle, but the stock market often does preempt the economic cycle, if you like. So the next expected 54-year cycle from 1932 would have been sometime in the 1980s. Most people stretch the Kondratieff cycle and say that we're still expecting the next Kondratieff cycle trough. And so from 1940 to 2012, you're talking about that cycle running 72 years, which I think is a little bit long, or 70 years. No, that's almost from 1940 until from 1940 until 2012 is 72 years, which I think is a bit long for a 54-year cycle. But the Kondratieff cycle is an idea that's not necessarily integral to Hurst's principles, and so the amount that it can vary by is very much up for debate. But in terms of a 54-year cycle, according to this analysis, the 54-year cycle troughed here again in 1982, and so there is the 54-year cycle, and so we would expect the next 54-year cycle to trough in 2030 or something like that. So in terms of a really long picture, I suspect that that might be what we're looking at, and that in fact the Kondratieff cycle, as a result, probably experienced a trough, although perhaps it's not so readily visible on charts because of issues to do with whether you rate things in terms of dollars or gold and all that kind of business. So possibly the Kondratieff cycle did form a trough in the 1980s or 1990s, but it's just not very visible. I don't know. I'm not a Kondratieff cycle expert by any means. So this is the default analysis, and so I'd like to point out two further things. First of all, the post on the forum, which inspired me to talk about this today, compared what's happening in the markets today, and let me draw a circle around that over there, okay, in terms of that pattern that is forming there, okay. John Silent One compared it to what was happening in the 1970s, okay, and let me draw a little circle around that, okay. And I think you can immediately see there are obvious visual similarities. Okay, both of them look like what in classical technical analysis terms would be called an expanding triangle. Both of them are tracing out shapes that sort of fit into an expanding triangle like that. And the trough in 2009 over here, in that way, bears many similarities to the trough in 1974. Okay, so the question is, of course, what does that mean about what's happening now? Can we get some greater insight in terms of where the market is actually going now? Well, the first thing to point out about this default analysis is that this default analysis actually has these two troughs as of different magnitude. This analysis has the default, has the 1974 trough as being of 9-year magnitude over here, okay, and it has the 2009 trough as being of 36-year magnitude. So although a comparison between the two is definitely very valid, we're speaking about a very different magnitude of cycles. So that's the first thing to be aware of. That's if we use this this default analysis. Having done a default analysis, the first thing that I always do is I then see if I can change Sentient Trader's opinion about what is actually happening, and get it to instead analyze things the way that I think things might be playing out. And here is what I've called an alternate analysis. Here is the result of doing exactly that. Now, I've simply applied an expert model so that I can tell Sentient Trader what I think might be happening. Okay, and let me point out a few basic differences. The first thing is that you'll notice that the 18-year cycles look a lot more regular. Sentient Trader has allowed for a lot more variation in the length of these cycles. I prefer this analysis because the cycles are a lot more regular. You can see the height of these 18-year cycles are looking really pretty good, very even. Okay. What are the fundamental differences? Well, the fundamental differences are that the 2009 trough becomes a trough of a much shorter cycle. In fact, only an 18-month cycle, and the 9-year cycle is displaced to the right and occurred in October 2011. And you'll know from previous trader chats that that's certainly something I've been discussing a lot. So I'm holding on to the thought that the October 2011 trough, although it doesn't look very prominent, is in fact a really prominent trough. It is a trough of the 9-year cycle. It's an idea that is very interesting and I think bears a good deal of scrutiny. As a matter of interest, there are a few other differences in this particular analysis, and the main difference that is worth pointing out is that this trough of the 18-year cycle over here, there's the 18-year cycle, I have shifted from 1962 until 1966. Okay, for people who might, as soon as I say that the October 2011 trough was of 9-year magnitude, for people who say, but how can a trough that looks fairly insubstantial, and there it is there, how can that be a trough of the 9-year cycle? Of course, according to Hurst cyclic principles, very major troughs often do look insignificant because of the way that the cycles combine. Remember, of course, Hurst cyclic principles is about all the cycles working together, which is what makes it so fascinating. It's like a really intricate mathematical puzzle. And so here's another example of a fairly insignificant trough. If you have a look at it, 1966, which I'm proposing might be a trough of the 18-year cycle in this particular analysis. And again, it looks like a much less prominent trough than the troughs to either side of it, which are, according to this analysis, of much lesser magnitude. That is a feature of the mathematics of Hurst cyclic principles. So the fact that a trough might look insignificant does not necessarily mean that is the case. Okay, so this is one alternate analysis that I performed. Having performed this analysis, of course, I think it's really important to take a look at what the analyses mean about what's happening, what's going to happen next. So let me zoom in onto this analysis, and here we're looking at monthly bars. So each of these bars is a month. And let me turn off those semicircles. This is the analysis that assumes that if the analysis that we've been following for the last several years, according to Hurst cyclic theory, which implies a straddled 54-month trough in August of 2007, which is over there, as you can see, and that the March trough in 2009 was of only 18-month magnitude. This analysis assumes that, which then provides us with a 9-year trough in October of 2011. It doesn't look right, and it doesn't really feel right, and you'll know from previous trader chats that I believe there might be a 6-year echo at play, and I've got a few things to say about that in a moment. But it is a possible analysis. I often say that I really enjoy Hurst cyclic theory and analyzing the markets using his principles, because two different analysts can have very different opinions about what's happening in the market, but often the net result tends to be very much the same. What is the net result here? Well, the net result, I've chosen the 54-month cycle as a sort of a way of comparing these analyses. The net result indicates that the market is rising out of this 54-month cycle and is, in fact, very in terms of price, has very nearly approached the target. The target is, of course, this red box. So as you can see, the price is already within that target. Okay, and Sentient Trader has moved these what I call trigger lines, those orange lines representing the next move down. It has moved them from this red box to this price peak over here, which is, of course, the price yesterday or the day before, whenever I updated the data. No, it was yesterday. So Sentient Trader is saying that that the 54-month cycle, although it experienced a trough and a synchronous trough with the 9-year cycle as recently as October 2011, it is not expected to go very much higher. Okay, and in fact, in terms of price, it's already there. Interestingly, Sentient Trader expects some more time to pass, in fact pretty much the rest of this year to pass before the peak is really formed. So in terms of time, Sentient Trader says don't expect a move downwards immediately, but it's not impossible that the move downwards could start already, which is why Sentient Trader has moved these trigger lines over here. So this analysis is saying that we should expect fairly soon, and remember we're looking at a very long-term chart, but fairly soon we should expect a fairly dramatic and nasty move down to below the 10,000 level. Now everybody talks about the 10,000 level in the Dow Jones Industrial Average, so this target box is definitely below the 10,000 level. So this analysis is saying expect to move down to below the 10,000 level. Probably, that's where the center of that projection box is. When do we expect that to happen? According to this analysis, late 2014, sometime 2015. Okay, so it's still a good 2 years away before we expect to see the bottom of this current 4.5-year cycle. Okay. I see a question from Dave. Do your weekly or daily bars suggest the move down is beginning? No, not yet. I can tell you. In fact, if I change this, they don't